Shares of EV maker Rivian down by 10% after the company's production target for the full year was well short of the street's estimates. The EV maker reported a wider adjusted loss per share than expected as well and said it's cutting 10% of salaried jobs here. So for the full year, Rivian now says it will produce just 57,000 vehicles. The average analyst estimate, I believe, was 80,000 as it does announce this cut of 10% of salaried jobs. It looks like the only number that did not miss estimates was the revenue for the fourth quarter, which came in at $1.32 billion versus the $1.25 billion that analysts had been anticipating. Production in the fourth quarter was also a little higher than estimated, although deliveries at just under 14,000 missed the average analyst estimate.
Yeah, and remember, headed into this report, Julie, this stock was already under a ton of pressure. It was already down about 30% so far this year. And I think there have been kind of broader questions, right? How does a company like Rivian sort of navigate this broader slowdown in the EV market, which is tough already for a company like a Tesla, but the challenge is even more acute if you're a smaller EV startup like a Rivian.
Yeah, and there is some commentary from RJ Scaringe, who's the founder and CEO of the company, in the statement here. He talked about great progress in 2023 despite economic headwinds. And he says, we're excited about the year ahead. We're aggressively focused on driving cost efficiency throughout the business, achieving positive margins, and building on our go-to market function to support our long-term growth. And he also highlighted that the next vehicle, the R2, is still set to come out on March 7th.
All right.
We'll see.
Well, let's get more on this. To break down the EV makers report is Jordan Levy, Truist Securities Equity Research Analyst. Jordan, it is great to see you. So listen, Rivian reports, investors clearly not happy, at least initially here in the after hours, Jordan, but walk us through kind of your reaction, your response to the report.
Yeah, absolutely. And we're kind of in the midst of digesting the report. But what it seems to be is we already kind of saw street estimates coming in a little higher than we thought the company would report because they are doing that mid-year shutdown. But it does seem like, there's a bigger than expected kind of impact here, given all the things we know about interest rates, all the things we know about the demand environment right now. And so it seems like they're reacting to that. They announced a 10% workforce reduction and in salaried employees and that sort of thing. So they are addressing what needs to be addressed, but certainly I think the production slowdown or the lower than expected production is going to disappoint some folks.
Yeah, I mean, I assume that you're amongst those folks who's disappointed, Jordan. I know that your forecast was higher than 57,000 here. Do you think that this is a factor of the general slowing in demand in the EV market, or is there something specific to Rivian?
Yeah, I think it's a mix of both, right? Rivian is still kind of in that stage that Tesla was in its early life when it was sort of in that high-priced vehicle category. Rivian still falls into that bucket ahead of when they launched the R2 vehicle, and as a result, they're maybe a little bit more exposed to these sort of macro swings. And so I do think that's sort of a part of the overall story. But I think all that said, it has to be taken into account that Rivian did execute well in 2023. So some of this is being proactive on their part, I would assume.
And Jordan, though, you do have a buy on the name outperform. So what are the catalysts ahead that you think moves this stock higher?
Yeah, we need to see the R2 platform announced. That's coming next March 7th, so in a few weeks here. And then as we go through the year, I think the biggest catalyst is going to be, can they push toward those positive gross margins for the R1 line and the commercial vehicles? Because that's the biggest question investors are contending with right now is, can this company produce vehicles at a profit? And they need to show that they can. That's, I think, by far the most important factor.
And what about, again, getting back to sort of the competitive landscape here? You have a couple of earlier stage startups like a Rivian, you have a Tesla, and then of course you have the, establishment automakers that are in this market too. How does this year kind of shake out?
Yeah. I mean, look, I think that maybe some of the concerns around growth have been somewhat overstated. This is a slowdown year. We saw interest rates go really high. You still have average EV prices that are, 10,000 or more above sort of the ICE equivalent. So I do expect we'll see sort of a slowdown in that growth rate this year. But I do think it's going to fluctuate over time. And I think we will get back to high growth rates. I think we have to see interest rates, start to flatline and come down. We have to see the consumer get more optimistic. And we have to see companies launch lower cost vehicles. And that's a big part of the story, I think.
And Jordan, I'm interested with Rivian, they have to watch their spending. Jordan, cost control is important for them. At the same time, they need to expand their portfolio, expand their production capacity. How should they kind of think about that balancing act, Jordan?
Yeah, look, I think what's important for them right now is getting to the launch of R2, right? I think they can throttle R1 a little bit this year on demand because it is a higher priced vehicle, a lower volume category. But R2 is really sort of that, that lower price model, call it in the $40,000 to $50,000 range, where I think they can make a much bigger market and a much bigger name for themselves. So that has to be part of the focus. But on the other hand, you're right, they need to manage the capital situation, and they need to, and I think that's why you're seeing them announce the cuts to salaried employees and that sort of thing as well.
And Jordan, I'll get you out of here on this, kind of a broader question. You know Rivian and the broader EV space, and you kind of look at that market right now, Jordan, and just broadly EV sales are slowing. I'm just interested to get your take on, what you think is needed to kind of re-accelerate growth for that broader market, Jordan. In your opinion, is it a question of more affordable cars? Is it a question of range, more charging stations, or is it all three?
Yeah, I absolutely think it's all three. Look, like at the end of the day, I think if you get lower interest rates, if you get a more diverse slate of lower priced vehicles that appeal to kind of all the categories of buyers, and as you scale those volumes, you also need to scale the infrastructure. I think it's all three that over time have to come together. But I do think in the next couple of years, call it the next 4 to 6 quarters, you could see that pick back up with just more offerings from companies and coming in at lower prices, as well as sort of a stabilization in the rate environment that gives a little more consumer confidence around that.
Jordan, thanks a lot. Appreciate it.
Thank you all so much.